You do need gold to, be strong, for silver to be strong, even though I do believe that silver should outperform gold.
Joining us today, we get to talk with Keith Neumeyer from First Majestic. I find Keith really fascinating because he's had tremendous success building junior mining companies, something that I probably talk about a little bit too much on our live streams and even with Keith is the amount of times that we've invested in early stage junior mining companies where they ultimately went nowhere. Keith is an anomaly in the space because he's actually started these things from the ground up and taken them to multi-billion-dollar market caps. We also get into his thesis on silver, the supply and demand aspects, and how we could one day see triple-digit silver. So guys, I'm thrilled that you're all taking the time to watch this interview. Also, please hit the like button, subscribe, and ring that notification bell so we keep making you more of this content. Keith, thanks so much for joining us today.
Great, Steve. Nice meeting you for the first time.
So a little bit about our background. We started out talking about small cap stocks out of Canada, primarily in the cannabis sector. A few years ago, we started investing in junior mining. We invested in a lot of, I guess people call them penny dread fills, those early exploration type companies. We rarely ever get anybody that we chat with who's had a track record of success like yours. And from what I'm kind of learning, there's actually just not that many people who actually start junior mining companies that get to sort of that $1 billion plus market capitalization. So for our audience who's sort of never actually seen any of your content before, could you maybe tell us a little bit about your background?
Well, sure. I started in the financial markets in the 80s. I was actually a floor trader on the stock exchange in Vancouver from 84 to 89. And so I learned a lot about how the financial markets work and obviously learned a lot about mining because I was trading a lot of these junior mining companies and learned a lot about exploration, how business cycles work and everything else. And by the crash of 87, the Canadian financial market gobbled up by the banks in 89, and myself and several hundred people across the country, was out of work. And so in 1991, I put together, I started working for a couple of publicly traded companies in corporate development activities. And I ended up putting a company together, a copper company in 1992. And we started gobbling up some assets. We found a couple of interesting assets in Africa. In 1994, we actually made the first investment in the copper belt in 35 years. And we built a mill there. And by 97, we were in production. And that company's First Quantum Minerals. And I was the president up until 97 and then left that company in 2000 and then witnessed the dot-com crash of 2000, lost a little bit of money on tech stocks in that crash, and then put First Majestic together in 2002, focusing on silver due to my beliefs of the supply demand fundamentals and the necessity and importance of silver. And coming from copper, silver is very similar to copper. And I've been doing that ever since. So 19 years in, we've got one of the largest silver companies in the world, and it's really comes down to people. It's just surrounding myself with good quality people that I can trust.
So you're at conferences all the time. You're talking with, I'm sure, probably hundreds of companies a year, seeing the different strategies, the different business models. What's the thing the things that when you look at junior mining and it just maybe drives you nuts or you basically can flag it as an automatic failure from looking at it, that you see with junior mining companies whenever you get pitched an early stage company?
Understanding financial markets, and I would say that for any company, not just in the mining sector, if the CEO or the top senior management of the business don't understand the financial markets and how they work, and don't have relationships with the banks and the brokers out there that you're relying on, you're a public company. You're not a private company, so you have to know how to act as a public company. So being on the road, me as CEO, I like to talk to shareholders. I like to, listen to them, listen about their beefs or, about their compliments. I just like to have those discussions. So I'm face to face with the people that are truly invested in businesses that I'm a part of. And that way I've got an understanding of really our shareholder base and the needs of that shareholder base. And I try to make decisions based on the needs and the wishes of the shareholders. And I think I do a pretty good job doing that. And but it takes a lot of time and effort because you have to be in front of them on a regular basis. And I notice often that a lot of companies, management of companies, do not go to these conferences and do not get in front of their shareholders, and they actually ignore their shareholder bases. And if it happened, if I invest in a public company, which I often do, if I don't hear from that company, if they don't recognize that I'm a shareholder and I'm not being contacted, I'm not getting news releases, that I'm going to be quite concerned that, hey, look, these guys don't even care who I am, and I'm just going to sell my stock.
I remember back in, I don't know if it was 2016 or something like that, I invested in a junior lithium company, and I called up the CEO on the phone, which is one of the reasons that I always liked juniors, so that I could reach out to management and they talked to me. We had a few conversations, and I quickly realized that the CEO of this company was working on like 6 other deals in the background, and developing this company that I had taken my hard-earned money and invested in wasn't his primary focus. Do you see that as a big problem in Canadian junior mining?
I do, and then you can go through Toronto or Vancouver and go into an office tower, and just see 10 mining companies names on a single door with all the same address, all run by the same management teams, and and they just whatever's hot that week they promote it. Nickel's hot. We've got a nickel company. Oh, copper's hot. We got a copper company. And then you're right. They're not focused. And, I'm a big advocate of staying very focused and, trying to, and I always just run one company at a time. I'm the CEO of First Majestic Silver and have been for 19 years. I'm the chairman of a company called First Mining Gold, but I'm not involved in management. I'm just the chair of that company because I'm a significant investor and founder of that business, but that's it. And, where if you see individuals that have multiple placards on their door, then look out.
Okay, so let's talk about silver for a second. Silver bugs are pretty, common to find on social media. They are constantly popping up in our timelines if we're not necessarily silver investors yet. Sell me on the silver thesis. Why should I, as a retail investor, start to look for silver names?
Well, first off, silver is a very annoying metal. When I put together First Majestic Silver, I didn't realize how annoying it was. It has 2 faces. It has an industrial metal face to it, so it can move with copper, and also has a precious metals face to it as well, so it can move with gold. So right now, for example, the base metals are weak. Copper's been down, zinc's been down, lead's been down. And some of the softs like corns and other grains have been down as well over the last month or so. So it's really had a negative bias towards silver. The supply demand fundamentals for silver have not changed in a matter of 30 days, but yet the price is going down by over 10%, which does make it frustrating. You do need gold to be strong, for silver to be strong, even though I do believe that silver should outperform gold. We are mining at a 7-to-1 ratio worldwide. So for every 1 ounce of gold being mined in the world by all the mining companies, now we're only mining 7 ounces of silver, and yet we're trading at something in the order of 80-to-1, which can't last forever. It's pretty ridiculous. Back in 2011, when silver hit $50 an ounce, the ratio dropped down to 31-to-1, but it should be 7-to-1. So you come up with your gold price, call it 2,000 divided by 7. That should be your silver price. But just talking about silver itself a little bit, when I put First Majestic together, 19 years ago, fundamentals then were extremely good. We were, electronics was gobbling up most of the silver supply. The above ground warehouses were being depleted around the world due to electronics. 90% of silver that's consumed in electronics gets thrown into waste dumps. It never gets seen again. How often have you recycled a refrigerator or a freezer or a television or a cell phone? These devices are too expensive to recycle. There's not enough silver in them to really make it economic to recycle a lot of these devices, so they just get thrown away, and it's quite shocking. So, the mining sector right now is producing something in the order of 800 million ounces of silver per year. We're consuming this year, the estimate is 1.1 billion ounces. I've seen estimates as high as 1.4. So that difference of around 300 so on million ounces, about half of that is recycled. So there is some recycling that does go on. But yet there's still this deficit that's been there for over a decade. And, with the government's now pushing solar and electric cars as aggressively as they are, the electric car industry, we have 1.4 billion fuel combustion cars on the surface of the planet. Where the automotive sector produces 80 million cars per year worldwide, of which about just under 10 million of those cars now are electric cars. And that number is obviously growing every year as other automobiles companies get into the business. Where that 10 million cars approximately consumes about 65 million ounces of silver. Now, if you look at the solar panel industry, solar panel estimate this year is somewhere around 140 million ounces of silver consumed in solar. We all know what governments are trying to push solar, and that's a growing industry. So you've got two industries right there in an 800 million ounce market. Two industries consuming, about 25% of the world's silver supply, and these two industries weren't there 10 years ago when I put First Majestic together. And I thought the supply demand fundamentals back then were great. I can't imagine when the automotive sector is going to be producing 30 or 40 million electric cars per year and gobbling up the amount of silver they need. What prices are we going to have on silver to incentivize the miners to go and find it? We're going to have to have much higher prices, and that's why I coined the phrase triple-digit silver, a few years ago, because that's where I think we're going.
So, do you think that there's a reason why silver is so undervalued? Then is it just the opportunities here, or do you think that there's bigger forces at play that are driving the price down?
It's a very thin market. It's a very illiquid market. I shouldn't say illiquid because it does actually trade 1 billion ounces a day on the paper markets. But so it's leverage is quite high. It's something in the order of 300 to 1 or 350 to 1 or something. It's quite a ridiculous leverage. So that brings a lot of manipulation into the system because it's just such a paper-driven market. If you're Sony, for example, and you need 50 million ounces of silver delivered in a variety of ports around the world to produce your televisions, you're going to sign a contract with JP Morgan or HSBC or someone like that, and they're going to deliver that. They're going to say, okay, here's your silver at $21 an ounce, and they're going to deliver it over that period of time. And it's now in that best interest of that seller of that metal to keep that market within range of that price they just sold that metal at. So you've got this very large short position in the paper markets and a very large incentive for these banks to keep some normality or some stability in price. And what they don't like is when the investors get in there and screw things up for them, like we saw the Reddit crowd do, over a year ago, where you saw these clowns get onto CNBC and try to talk the price of silver down because these banks were starting to feel the pain because of these large derivative shorts they have against the metal. It is a bit of a crazy system, and I do speak out about it quite a lot.
Yeah, it certainly felt like that during that time where on social media and Reddit, we had people really buying into the sort of silver short squeeze thesis. It was gaining tremendous traction. And I even know our editor, Jay, he bought in the hype and went to his local precious metals dealer and bought a stack of silver thinking that it was going to be time to go. And it seemed like it started to go and then ultimately didn't get there. You think that social media and just retail investor interest could eventually actually successfully pull off a squeeze like what we saw attempted there over a year ago?
Well, I've always contended that it's going to be the industrial demand, which is going to break the system because don't, these are being an ex-trader myself, you get caught into these, I suppose, thinking processes whereby, you've got a trading range of something and you just always expect that trading range is going to be the same, over a long period of time. And it may break out of that range for short periods of time, but always will go back to the mean. And, eventually, there's just not going to be the silver out there to pack up these paper contracts, and they're going to realize that the game is up, and they're going to have to come up with another range that they feel comfortable with, and that means that they're going to have to readjust their books. They're going to have to readjust their trades, and like we saw in the nickel market, for example. When all of a sudden that market broke, we saw it in plating as well. A few years earlier, in cobalt as well as a few years before that. So these markets do break eventually, and it's just, you just don't know when it's going to happen. Is it going to be Apple has a headline saying we can't produce iPhones because we can't find any silver? I don't know. Or Tesla, maybe Elon Musk will buy some First Majestic or something. Who knows? But it will happen in my opinion.
Okay, so you mentioned First Majestic. What's the high level pitch for First Majestic?
Well, the company's one of the purest silver companies in the world. Most of our 50% of our revenues from silver, 50% of our revenues from gold. That's up a little bit because we did buy a gold mine in Nevada last year. Because most of our mines are in Mexico, and we're producing somewhere around 35 million silver equivalent ounces per year. Our revenues last year were about $530 million US. We've got 6,500 employees in over 5 countries with operations in the United States and Mexico. The market cap is cheap as far as I'm concerned. The stock, was $30 a year ago. It's now 10 Canadian dollars. I'm referring to, and that's just a function of this whole malaise that has been hitting the mining sector over the last couple of quarters. We're caught in it like everyone else.
Okay, so you guys recently had positive drill results at the Jerritt Canyon in Nevada. What can you tell us?
Yeah, well, that mine we bought in April of 2021. We have a particular view. Our geological team is quite excited about that asset. It's got about 2 million ounces of gold already defined there, and it's producing about 110,000 ounces of gold a year. We think it's going to be double that in the next 3 years or so. But it's never really been drilled to the extent that it should have been drilled. It's a big land package, 40,000 hectares in size. And it used to be the largest gold mine in all of Nevada back in the 80s. It was owned by Freeport-McMoRan back then. But it's just been in some junior hands that mismanaged it. Didn't finance it properly, didn't spend the money where it should have been spent. And we were happy to get it into our portfolio. And we're just doing those investments that should have been done a decade ago. And we're running into some great drill results. And you're going to start to see production increase over the next 12 months as a result of current activities.
So is First Majestic going to be focusing a little bit on gold then as well over the future?
Well, we'd like to find a better, a nice silver mine, but I can tell you, like I mentioned earlier, the ratio 7-to-1 mining. It's hard to find good silver mines out there. It's we could fill our portfolio with gold mines. It's surprising. I think rarely does a month or so go by without us getting access to look at a new gold mine. Or an operating gold mine, I mean. But silver mines are hard to find. We're always looking. We're doing due diligence on a regular basis. We'd like to keep our purity north of 50% silver.
It's funny that the ratio is 80-to-1 of silver to gold, because it seems like when it comes to actual publicly traded companies, the ratio is about 80-to-1 gold companies to silver companies, at least from our experience. Okay, true. So for any First Majestic investors that are watching, any sort of near-term timelines or metrics that they should be watching for over the remainder of the year?
Well, we started off a little bit rough in Q1. Jerritt Canyon is taking a lot of efforts from management right now to get that asset turned around. And Q3 and Q4 we think are going to be pretty strong quarters as a result of the investments that we've been making over the last couple of quarters. So, look for our financials to be looking pretty good by the end of the year. We're expecting revenues north of 700 million this year, so pretty good growth year over year. And we should. And then 2023 is even going to be better than that.
Well, Keith, thanks so much for taking the time to do this. We really appreciate your time.
Well, it's great meeting you, and thanks for the interview.
All right, everybody. Thank you so much for joining, and please let us know what you think in the comment section.